All right, welcome back to Stock Tricks with Nick for this week's trading recap from January 26th to the 29th. Now, before I get started, I know this week was maybe the most exciting week in the stock market, definitely that I've experienced, maybe ever, I don't know. I did make a video about GameStop, the short squeeze, Citadel, Robinhood, all of that. So I won't be covering any of that in this video, but I did make a video for that I'll link above right while I'm talking here. So if that's what you're interested in, make sure you check that out. But this will be a full weekly trading recap. So for myself, only down $133, which is less than a half a percent, 0.3% down. And this is something that I'm really proud of because during a bull market and while things are breaking out, everyone's making money, right? But something that I struggled with the last couple of flushes, the last couple of strong pullbacks, like we got in September, and there was one, forget, middle of October or so. I'm getting better and better at taking profit on the way up, starting to build a hedge position, and really not getting too far down off my account balance highs when the market does flush. So last week I made $3,000. That was great. That was exciting. But personally, I'm more excited about just being down $133 during this week. So that's an accomplishment for myself. And if you follow me on StockTwits, Twitter, I was calling this out, calling out all the warning signs that the market was giving that we were likely to see a pullback. Now, there's no absolutes in trading, so you just have to play the probabilities to your favor. But we definitely saw that coming, and thankfully, we took profits on the way up, protected our entries, and played a hedge position with SQQQ. So some notable winners: BLNK up 20.5%, FUV 15%, and then the SQQQ hedge that was up 9.5%. And some notable losers was TCON 7%, AYRO about 7%, 6.5%, and then TLRY 4.8%. If you're new to the channel, I make these trading recaps every Friday. I do a breakout watch list on Sunday morning and then a live stream on Wednesday at 7 p.m. Central Time. So make sure you subscribe to the channel if you enjoy trading content. Leave a like on the video if you enjoy this, and follow me on StockTwits, Twitter, and TikTok. Oops. So the agenda, we'll go through the indexes, kind of the earnings that we saw with Tesla, Facebook, Apple, and just give a full kind of market recap there. I am going to be switching brokerages after everything that went down this week, so I'll get into that. We have to review the TikTok Trading Challenge week 4, and then go through the 2 watch lists that I put out, the breakout watch list on Sunday and Wednesday's very thin watch list. We kind of knew that we were going to pull back here, and I'll share all my open positions. Quick disclaimer, uh, nothing that I say is financial or trading advice. This is all for educational purposes only. Trading comes with extreme financial risk. Please do your own due diligence before trading. All right, so let's jump into switching brokerages. So as a trader, we're trying to control risk, right? We want to add as much probability as we can onto our side, and then take the trade that we can make multiples of what we're risking with our stop losses. But there's more than just price risk with trading. So with price risk, you manage that by using stop losses. So you're only going to be losing 5 to 7% on any new trade, and then as the trade moves higher, as the price moves higher, you can start protecting your entry price with your stop. So then you take out your initial capital risk. Liquidity could be a risk. If something trades very thinly and you have a large position size on it and it starts flushing, well, you're not going to get the exact right fill that you put at your stop loss because there's not going to be sellers at that price. So if something trades very thinly, then you have to resize your positions so you don't get that, you don't take on extra risk that way. Emotions, this is something that traders are just starting to talk about, but if you're not having a great day emotionally, you're likely to make mistakes trading. Or if you didn't get enough sleep, you're more likely to make mistakes. On Thursday, I was celebrating an actuarial exam pass that I took back in November. So when Friday rolled around, I wasn't feeling great, so I just didn't trade. So if you're not 100%, you can control that risk by either trading smaller sizes, using tighter stops, or just not trading. And then what I wanted to get to today is your connections, so internet and brokerages. Make sure you have good internet, make sure you have a backup, Wi-Fi, all that stuff. And with brokerages, I had been using E-Trade for about 2 years now. I started with Robinhood. Then as I got more into trading and started to treat it more like a business, switched it to E-Trade. But after the past like 2 weeks or so, actually the past month, E-Trade has been really finicky. The power E-Trade has been shutting down a lot, especially at opens. With all this increased volatility, I need to handle that as my own risk. Like I don't have to stay with E-Trade. You can go to whatever brokerage you want. So one way I'm going to be protecting myself is moving my Roth and individual accounts from E-Trade to TD Ameritrade with Thinkorswim. I've been doing that over the past 2 weeks because we're talking about risk. Using a new platform, there's some risk there. How do you put in the right orders? How do you set stops? All that stuff. So I've been doing that for the past 2 weeks, getting started there. And now I have moved everything over. So starting next week will be Thinkorswim. And then for the TikTok Trading Challenge, after what Robinhood pulled, there's no way that I can keep the TikTok Trading Challenge, which we'll cover in a second, going with Robinhood. So I'll be switching that over to public. And if you're like me and you're done with Robinhood, I just signed up for public this week, and I got a link in the bio of this video where you guys can get $10 of free stock there. Public's kind of cool. It's like a StockTwits matched with Robinhood, so you can trade partial shares. Same thing with Robinhood. They are much more honest about what's going on, so I appreciated that. And you can basically follow people and see what's in their brokerage or in their account. So you could follow Stock Tricks with Nick on public and see what stocks that I'm trading. So yeah, just wrapping that up. Try and control as much risk as you can, and that includes more than just price. We got price, liquidity, emotions, connections. There's bound to be more than that, but just take that into account. All right, so market recap. Rough week in the market. You can see S&P 500 down 3.3%, the Qs 3.3, Dow Jones 3.3, and then that FFTY, which is the IBD top 50, that more correlates with the growth stocks that I trade. So to see that down 6.7% and my own account only down 0.3%, that really makes me happy. And again, we made a good amount of money last week and the previous couple weeks, but the fact that we were able to keep so much money, that's what I'm really proud of right now. We saw growth flush tech earnings sell off. So Apple, Facebook, Tesla all reported earnings this week. And like I said, I made another video about the GameStop, Wall Street Bets, Market Madness. So make sure you check that out. All right, let's jump to some charts. Start with the S&P 500. So here we got Friday or Monday, and I'll point this out on the SQQQ chart, but this looked like it was starting to flush. We punctured under the 8-day exponential moving average. That's this purple line, and then rallied back up to close basically right at the high. So that was a warning sign for me, but a lot of people said, oh, that's just the market showing how strong it is. Got some sideways action on Tuesday because the big guys were waiting to report earnings close on Tuesday. And then Wednesday pulled down, reporting on Wednesday, sorry. Wednesday pulled down, rallied a little bit on Thursday, and then flushed Friday. Now we closed under the 50-day simple moving average, which is pretty scary. Last time we were under the 50-day was November 4th. So definitely a time to be a little bit cautious with your trading. If you're a swing trader like me, we're probably out of most positions and got a lot of stops taken out the last couple days there. So next we have the QQQs, and I highlighted this. Let's see. Oh, it's not showing it? Yeah, okay, there we go. So I highlighted this candle where we topped out in September. I talked about this on the midweek movers live stream and maybe on the, no, just the midweek movers. Um, this candle in September was exactly the same candle that we got on Monday, where we were above the upper Bollinger Band, which is just 2 standard deviations above the 20-day simple moving average. We flushed during the beginning of the day, rallied back up and closed above the Bollinger Band, but as a red candle. So we saw selling pressure starting while an index was above the Bollinger Band. Usually a bad sign, right? Uh, we were already in a very strong uptrend, but it basically went straight up here. We weren't going like at that 45-degree angle. Uh, the angle kind of picked up, and we were starting to feel euphoric in September. Not as extended, but similar type of action happened last week. You see, we were just kind of trotting along between the 20-day and the upper Bollinger Band. And then last week, things started just taking off, ripping, and you started to see less and less stocks move up, but uh, the amount that they broke out wasn't 5 to 10%, it was 30%, but it was uh, a very few number of stocks. So the market breadth shrunk. That's a sign that the market's starting to get into a topping formation. But then, yeah, Friday, we pulled back all the way to the 8-day, then rallied back up. Red candle closed there. Red candle closed the next day. And then Wednesday, Thursday, Friday, we flushed down. So that was Monday's candle was a big warning sign for me. I got stopped out of a lot of trades and didn't add too many names back when they got stopped on Monday because I had this kind of move, especially when we go to the FFTY chart, that was concerning. Dow Jones, similar type of action, poor relative strength compared to QQQs. So I don't usually use this too much as a metric of the stocks that I'm trading, but now well below the 50 and below this volume shelf. So uh, looking a little bit dangerous for Dow Jones. And FFTY, IBD top 50. So here's where these were the growths, basically the growth stocks that I was trading. We had this choppy action from that September high, see that red candle, September high through basically mid-December. And then mid-December on, we just took off and things got really, really extended here. So once we were up here, very few stocks were creating bases that um, was setting up for stronger breakouts from base. Everything was maybe just pullback buys. That's another warning sign. And then you can see from the high here, we already pulled back 10% and just in a couple trading days. So it's stair steps on the way up, elevators on the way down, and that's why we want to be chasing the price up with our stops, taking profit on the way up, and then I put on a pretty large SQQQ hedge position on Monday after everything started flushing. So that was dangerous. We knew it was coming. We wanted to make some profit on the way up. So any breakouts that were happening on high volume that we could quickly move our stop to our entry, we were playing that. But this week was all about playing defense, and we played it really well. So those were the indexes. I did want to just jump to AAPL, Apple, just to show they had earnings on Wednesday, then Thursday, Friday flushed down. So now we're kind of back in this cup handle. So basically the base of the handle here. We'll see if there's any support there while the 50-day starts to move up. But this is a good amount of volume selling off. So that's a little concerning. Let's go Facebook. Similar story, not as good relative strength as Apple. This never kind of made a cup and handle near the highs. That flushed with all the censoring stuff, and then now we're below that volume shelf too with high volume. That's not great. And then Tesla. And as Tesla goes, that's typically how the growth market goes and the stocks that I want to be trading. Very strong action all throughout the year, right? And this was the first time. If this wasn't a going into earnings, this would have been a nice pattern to buy that breakout. But I don't buy stocks going into earnings. Earnings is always a coin flip. Too much risk there with not as much probability on your side to win. Because even if they have great earnings, the stock can sell off if there's depending if they don't meet the expectations of the market. So had earnings on Wednesday. Thursday held up on the 20-day simple moving average relatively well, but then Friday we undercut that, closed under that, and now we have from Friday's close, we have about 14% that could pull back to the 50-day simple moving average, also kind of pulls back to that breakout point here. So maybe we find some support uh, around $700 with Tesla. So we'll see how that reacts. We have a whole weekend for news to make things more difficult. So that was the market recap. Let's go the TikTok trading challenge. So if you're new to the channel, all the money that I make on TikTok, I had been throwing into a Robinhood account. Now I'll be moving that to public. And then on every Sunday, make that breakout watch list of stocks that I think have breakout potential in the upcoming week. I choose 4 of those stocks from that list, put a poll out on Twitter, and let you vote on how I manage the TikTok account. So last week we had, you see the distribution, 42% votes went to LAZR, 27 to YALA, 17 to BEEM, and 14 to ENPH. Whoops. And thankfully, as the market was selling off, we got one winner and a really strong one with YALA up 28.8%, while LAZR down 7.8 or 7.7, BEEM down 10.3, ENPH down 15.2. So this week, the TikTok account did better than my own. You guys were up 5.2%. I was down 0.3%. And then on the year, we're 16.8%, or I'm at 16.8%. You guys are at 7.75%. If at the end of 2021, the TikTok account beats my own trading account on a weekly compounding basis, I'm giving the entire account away. So if you haven't yet put your Twitter handle or TikTok handle in the comments of that initial TikTok YouTube video that I made, make sure you do that because that's all you have to do to sign up. So let's break down some of these charts and why I thought they were quality breakouts going into the week or potential going into the week and how they reacted. So let's start with the big winner. This was a IPO. So IPO rocket base broke out 164%, pulled back 40%. So typically once the stock pulls back over 25% after a move like this, it'll need 8 to 10 weeks to base out. With IPOs, you have to act a little bit quicker. So let's see, this was 30, so that was 6 weeks before it went. But let me hide that. This was forming a inverse head and shoulder. So you have the left shoulder, the head, the right shoulder, and here's Monday. We were looking to take it with a break over those 2 daily highs right there, which would have been the opening price. And this opened, just rocketed, tons of volume, and this has held up extremely well. So this is going to be one of the stocks that I'll be watching for after the market starts to find some buyers step in. Maybe this goes through a tightening up range, and we can trade this again for a possible breakout. But this was the second most voted stock. You guys nailed it, up 28.8%. This is doing all the right things. Even on its one pullback day on Wednesday, it came on very little volume compared to the 2 up days. So looking good with that one. Let's go LAZR. Unfortunately, this was down 7.7%, and even more unfortunate, I traded this one too. So this was the move on Monday. We gapped up, pulled back down to test the 8-day, and then rallied back. Remember, on Monday everything pulled down, rallied back higher. But this held, this closed really well compared to the S&P 500, compared to QQQ. So was pretty interested in this. I bought it the next day, kind of off the lows. I think when it, forget what price I got filled at, but during this pullback, next day took half off right at the open just because everything was flushing down. It rallied up. It was up 10% on the day, looking really strong, and then everything squatted. So I moved my stop to my entry on that trade for the second half of the position. So this was only maybe a 3% maybe even less, 2% loss on the trade because I was actively managing it, because I knew we're close to a market top, short-term market top. I don't know. There's no reason to think that we've topped out for an extended period of time. I'm just saying the market was getting frothy. It seemed like we were about to top out, so I was quick to move my stop to my entry, take out that initial capital risk. And if I'm wrong on a very small amount. And that's exactly what I was. I was wrong. I was wrong on a very small amount. This pulled back, and another one that's holding relatively well. This can set up again for a possible breakout in the future. We do have this kind of volume shelf that we'd have to work through. It's LAZR. Next, we have BEEM. And this one, I was really excited about this one. Thought it would be a big winner if the market held up. Unfortunately, it did not. But really strong move through here. Let's see. At 280% just from November 19th kind of breakout. Then we went through two pullbacks. The first 36-ish percent, second was 20%. And then I said we had a possible buy point if we broke over Friday's high. And this is exactly why I only buy on the way out, because this stock was down, what, 12%? I forget what I said, but you would have never taken this trade because we're only buying as it breaks over the high of these two pivot days. So 66.14, 66.32. It never got there. We opened lower. We tested the 20-day, never got to the pivot buy point, flushed, had a rebound day on Tuesday, and then just stayed under the 8-day the entire time. So we're only buying on the way out, and it never showed enough strength to get in. So doesn't look great. Needs a little bit of time, but I mean, this has some power behind it. So definitely one I want to keep on my watch list going further. Similar story with ENPH. This one actually did move over the breakout point that I was looking at. We had an inside day on Friday that set up the trade. Tons of volume kind of coming out here. Things got nice and quiet. And then we opened over the breakout point. So that's another thing. I don't chase gap ups on Monday. We gapped up huge in the market. So not a trade that I would want to take, even though it went over the breakout point. Rallied a little bit, and then this flush, and notice this didn't rebound at all compared to the rest of the market, which you saw flushed, came all the way back up. This is a big warning sign. If a growth stock's showing relative weakness while the market's bouncing back, you might just want to cut that trade at even a small loss, anything like that, because the next day we got a strong move down, and then Wednesday, Thursday, Friday kind of traded sideways, but now it's really respecting the resistance of the 8-day exponential moving average here. So those were the 4 names from the Tik Tok Trading Challenge this week. I will be putting on a breakout watch list on Sunday. Might need to call that a general watch list because I don't know if we'll see many breakouts going into next week, but we'll still go through the motions, have 4 stocks from there that you guys get to decide on how I invest the public account with all the money that I make on TikTok. So that was the Tik Tok Trading Challenge. Sunday's watch list, YALA was on there. That was up 37% from last Friday's close. And then we got some large losses: NOVA, ENPH, TCON, BEEM, DAC. This was the first time I actually got outperformed by the S&P 500, so down 4.7% on an average of those. I think I had 16 or 15 names, which is unfortunate, but again, compared to the FFTY, and that's more similar to the group of stocks that I'd be looking at trading, that was down 6.7%. I was down 4.7 on average with this name, but it really was only because I picked up YALA that really carried the weight. So rough week for breakout stocks. We kind of knew we were coming to a close, but I do want to go over TCON because that's one that I traded and it was my biggest loser of the week. And that's something with this channel, if you're just starting now, I don't just share my winners. I want to share my losers as well, because that helps me go through the motions, relive that experience, and hopefully not make similar mistakes. If it is a mistake, sometimes a trade is just a loss. But then also it helps you guys out. If I'm only showing you winning trades, trading, you're not just going to have winning trades. So one, I lose credibility. Two, if I don't help like talk through what I'm feeling about when a losing trade is happening or how I'm managing a losing trade, that's not helping you when the market starts to pull back. And as we saw this week, the market doesn't always go up. So TCON, this has been in a strong uptrend. I've traded this a couple times, starting to flag out here. You can see this kind of action. Um, I took the trade with a break over Monday's high because I think, let's see, 1114. Yeah. So in the breakout watch list, I said if we broke over January 15th high of 1114, that would have been a buy point. We got really close to it on Monday, got to 1110, then pulled back. But this Monday candle looks better than what the other candles look like in the market. So on Tuesday, when this broke over the high from Monday, 1110, I put the trade on. It got out a little bit and then just immediately came back on me. I got hit for a full stop loss, which was tough, down 7%. But it's important to always listen to your stops because look what would have happened if I didn't. From Tuesday's close to Wednesday's close, that would have been an additional 17% loss. And as a trader, as a swing trader, I'm always trying to keep losses as small as possible. That's why stop losses are between 5 and 7%. Ideally, we can get them to 3%. Then we could take many risks. But full 7% stop. Thankfully, on only a half position size because I was trading defensively. But yeah, if you don't listen to your stops, you're more likely to have a large loss, and that really can quickly eat into your account. So this, I mean, maybe this firms up again later on, but we do have this volume shelf from this kind of flag. So we'll give this some time. So that was my big loser of the week. And just a quick one in the same day, I was in and out. And not a great breakout watch list last week. Midweek movers. If you were on the live stream, I said market doesn't look good. Earnings were selling off after hours. Let's find a couple stocks that showed good relative strength that we could watch. And I wasn't expecting much going into the second half of the week, and that watch list reflected that. From 7 different names, we had an average loss of 1.5%. MDXG was the only winner with 7.4% higher than Wednesday's close. And let's go through APHA because I did take that trade as well. APHA. So this is one that I'm definitely going to keep on the watch list going forward because it's holding up relatively well compared to the others. Had 107% move up and a pullback of just 16%. So high tide flag, 90% or more in 8 weeks or less, pullback of within 25% from the highs. Good volume on the way out, very quiet, relatively quiet volume, but these daily bars are very large. So every day there's a disagreement on the price. And when that happens, it's more difficult to kind of shock people, shock investors, shock traders, and get people to bid up a breakout. So that was one kind of strike against the chart. It was holding the 8-day exponential average really well. And I did take the trade as it broke over the high from the 26th. Then it squatted, and then on Friday went under the low. And I think I got filled a little bit lower. This was one I did in Thinkorswim, so don't have the exact numbers for you on here, but yeah, something that I listened to my stop, looked like it was setting up, still could set up because we haven't even undercut the low of the first pullback here, so let's keep an eye on it. It was in the right industry that was working, so we'll see. All right, so that was the midweek movers watch list. Now we go to current positions. Not much going on. I got stopped out of a lot on Monday, took some into profit Tuesday, Wednesday, and basically sold everything else on Friday. I do have a SQQQ position that I have 9.5% profit on right now. So have my stop at my entry on that guy. If the market just rips higher from here, if it does, great. Then we can find some more long setups. Um, but right now, I have no long positions. I'm all cash. I'm also moving everything over to TD Ameritrade with Thinkorswim. So that takes a little bit of time. And this was the perfect opportunity to get everything kind of liquidated and move over. So took advantage of that with the market conditions. Um, and the leaders need time to kind of prove themselves. So I'll be cash until then. One thing that Leif Sereda talks about in his trading program is when we get these strong flushes like this, the first couple breakouts that you see, they might get sold off relatively quickly, maybe the same day or in a day or two, because a lot of people, traders, institutions, whoever, just took a very large flush, right? All the stocks pulling back, a lot of people taking losses this week. So what are they going to do when if the market bounces back and we see a couple quick breakouts? They're more likely to take profits from that, so their overall P&L is gets softened up. It's not as red as the last week. So until we see breakouts go like breakout with volume, hold the daily highs, and then continue on, I'm going to be taking very small position sizes. I usually take 10% my portfolio. When I'm trading defensively, it's 5%. After a flush like this, if I put any new trades on Monday, it'll be 2.5%. I won't be looking to make money from these trades. I'm basically would be putting those trades on to just feel out the market, see what industry is working, see what types of setups are working. And then if we can get some winners, the market bounces back right away, then I have no problem getting in with larger position sizes because I traded so defensively. I had the short position on. I took profits into the breakouts. So I'm only down 1.7% from my account balance high. So once the market firms up and goes again, I could be just as aggressive uh, because my confidence wasn't hit, my P&L wasn't hit. We were trading defensively. We missed a couple of the breakouts. You're going to miss a couple of those, but by doing that, this was the first kind of flush, first pullback that I protected the capital really well. And that's something that Mark Minervini talked about. I put that on StockTwits and Twitter. We talked about that on the live stream. He was calling for a market pullback, and he did so on September 1st, right before September's pullback. So after he posted that video on YouTube, make sure you subscribe to him. Very, very. He does not post videos often, so when he does, you better listen up. And he nailed this one as well. Had a couple stocks that I wanted to share, and we'll wrap it up there. So we went over TCON, the big loser there. Another loss that I took, again, trying to be transparent with winners and losers. AYRO, really strong breakout through here, 250%. Went through a good basing period. Then things pulled back. Everything got tight here. I didn't get the best fill on this. The perfect breakout point would have been 717. I think I got filled at like 750 through here. And then because I didn't get the best fill, I took some profit on the same day. I think I could throw the trade history on. Yeah. So let's see. What did I get filled at? Yeah, 751 got filled. Took about a sixth off at 772 just to take some exposure off, get some profit on the name because, again, didn't hit it exactly where I wanted to. And then the next day we gapped down, stopped me out on that. Listened to my stop. Good thing I did because we had another very volatile day on Thursday and then the lows under the 50-day now on Friday. Another one to watch for. This pulled back on extremely light volume. Definitely could set up again. But we have to listen to what the market's telling us right now. Until the market firms up, we don't want to get aggressive with our trades. And then the two big winners that really bailed me out this week, BLNK. This is one that I traded this breakout through here, sold some into strength, got stopped at the rest at even on that first kind of move. and then bought on, let's see, Monday, got filled at 45.47. And then this is one of the few that rocketed higher. It was up 30 something percent on the day. Took a lot of the profit off into the candle on Tuesday. Took even more off on Wednesday, and then got stopped out 52.38. Well in the money on Thursday. So when I was talking about we want to see high volume breakouts at the breakout point, BLNK did that perfectly. I was able to move my stop to my entry immediately, take the initial capital risk off, and let it run. Similar story with FUV. Bought on just a pullback buy, had the inside candle day on the 19th, broke over that on the 20th. That was my buy point. Had a great follow through day on the 21st, and then just very choppy action, holding up still really well. Lower volume on the pullback days, so this could firm up and go again, but I just wanted to be cash going into the weekend. So those were the two big winners that really helped me out, along with NNOX, but we covered that during Wednesday's watch list. So that is going to be the trading recap from January 26th to the 29th. Please subscribe to the channel if you haven't already. Like the video if you enjoyed or got anything out of this, and follow me on StockTwits, Twitter, TikTok. And make sure you tune in tomorrow for the breakout watch list, maybe just watch list, and vote on your favorite setups going into the week. Take care, and I'll see you tomorrow.